Well, hello. Welcome along to the Future of DePIN show. It's December 2025. Christmas is around the corner. AI models are eating the world. The only thing more scarce than my chance of getting a tan this year is AI compute. Massive supply crunch for the centralized incumbent giants, I think it's fair to say. But with decentralized players rolling out tech faster than a caffeinated cheetah, a few questions weigh heavy on my mind at the end of this year. Is decentralized compute going to win? What might it look like if it does? And also, have I bought the right bags if indeed it does win? So today we're going to break down 6 DePIN projects that are turning GPUs into gold mines and the projects we think are going to win in 2026. As always, to help me break this glass in case of emergency on this conundrum, to give us some deeper insights into all of the stuff that we're talking about, basically, is Mr. Bradley, aka DePIN Connection.
Good morning, sir. How are you doing, man?
I'm doing good. I've got my chair is wearing a Christmas hat. So
very nice.
To my head for tomorrow when we pre-record the in between Christmas and the New Year's episode of DePIN Coffee Hour. So yeah.
Very nice.
How are you doing?
Should have rocked my Santa hat. I didn't think about it. I'm doing well, man. As long as you don't look at the charts this morning, everything's great.
Yeah.
It's been a year. It's been a year. You know, it's interesting. I feel like fundamentally, I can imagine, going into this year, I couldn't imagine that we'd be where we are, with all these DePIN projects driving revenue, finding product market fit, to the extent that they have more demand than supply in many cases, but the charts don't reflect it. So at some point, things have to catch up. Right now is the time to be dialing in. And I think we've been focusing on the sectors that are primed, in my opinion. We talked about robotics last time. Today we're going to talk about GPUs and the powering of AI models. And I think in a future episode, we'll talk about the data collection aspects. I think data is going to be really valuable to train these models. Yeah. But yeah, absolutely. The discussion today, there's a real problem right now with the compute that's needed to train the AI models, and soon inferencing or interacting with the models is going to be really the main draw on compute resources. I think a lot of the focus to this point has been on the GPUs. But it's not just the GPUs. This is something I've been talking about throughout the year. The power grid is actually going to be the main factor here that could constrain things. Also, the cooling systems and the water side of things. So I have some stats I'm going to kick things off with to kind of run through that. But before we get into that, I didn't know if you had anything else you wanted to lead off with.
No, that's it pretty much. Yeah, it's super interesting the more you get into this space, the more you realize how many different parts there are to it that are like problems that have to be solved. I think humanity is great at solving problems, though. I will say that. I think we're very adaptive as a species. And I think all these hurdles will eventually be overcome. I am very interested in seeing what that lag looks like between we're doing great things, we've built great technology, it really works, and there is demand, and people are going to use it, and they are using it. So the tokenomics nerd in me, when that doesn't immediately translate into basically tons of buy pressure and token price go up, it's one of those things where it drives me absolutely bonkers. So I'm super keen to see what happens with that lag that you talked about there, and I'm hoping in 2026 we're gonna get that discovery, because I feel like 2025 was a huge year for DePIN, and it just has not been reflected in the charts at all. I feel like the charts just tell a completely different story from what's actually happened on the ground.
For sure, and I will say, like, all the projects that we're going to cover today have revenue. Their prices are far down from their all-time highs in pretty much all of these cases. But the fundamentals are stronger than they've ever been. Now, the tokenomics, there's a couple of projects that we're going to dive into here and get into these details, but a couple of them have changed their tokenomic structure. This is something we've seen with DePIN projects this year. I think they've been kind of forced to rethink tokenomics. That's one of the positive byproducts or silver lining, if you will, of such a down year is that, they're like, hey, the fundamentals are there. We're driving revenue and we're kind of left scratching our heads and have to try new things. And I think that's actually going to be what leads to the decoupling of DePIN from the rest of the market. So the revenue actually supports token price. So I think looking forward, we're going to look back at this year as a huge year of growth in finding products market fit and driving revenue, but also really a year that we rethought the tokenomics models and found something that really worked. And I think in the long run, it's going to be very beneficial to the space. But to kick things off, the big problem that not enough people are talking about that's going to be a huge topic of discussion is going to be the power and the cooling systems for these AI data centers. And I think it's really important to cover this because it kind of draws the picture as to why these projects we're going to talk about are really poised to be super successful. And there's this big debate right now about the US versus China in the AI race. Well, just to put this into perspective, I don't know if you can pull that up on the screen, that the page I've shared there. It might be kind of hard to see, but this is talking about generating 100-word email with ChatGPT. Okay, so one 100-word email alone uses about an Evian bottle's worth of water. Okay, so you think about all the emails that are going through, all of the usage of ChatGPT and the amount of water that's necessary there. And we'll talk more about that in a minute. But the big thing, though, is the electric drain. Okay, so that one email is the equivalent of powering 14 LED light bulbs for an hour. That one 100-word email. So you think about the massive power drain on these different data centers. Now, you're hearing it from across the board. OpenAI is pleading with the US to substantially ramp up its investment in new energy capacity, saying that we're going to fall behind China if we don't do so. We're hearing the same thing over there, right? We see that this is from a veteran Chinese investor talking about how China is likely to overtake the US in AI within the next decade if the US doesn't catch up on the power grid. And we're hearing the same thing from Microsoft. Okay, this is Microsoft's chief executive talking about the biggest issue right now is not a compute glut, but it's the power. And this is a time where we have the likes of Amazon, Google, Meta, Microsoft investing hundreds of billions of dollars into this infrastructure. That outlay, mainly on data centers, has triggered market fears of an AI-fueled bubble. And we're hearing this a lot over the last month or so about this AI bubble, right? And there's a lot of concern right now. And this is why. Okay, so this is from a Harvard economist talking about how in the first half of this year, in 2025, if we didn't have the AI data center buildouts, our GDP growth would have been 0.1%. In other words, all of the economic growth we're seeing in the US right now is because of AI and because of the data center built out right now. So our entire economy is relying on this sector. And if we can't power these things, there is a real chance that we do see the bubble bursting here and us falling behind China in this AI race. And we're already starting to see it, guys. This is in Silicon Valley. These are 2 AI data centers that have been built out. So 2 freshly built data centers, but they can't be turned on. They're sitting idle. There's not enough power capacity for them. And this report is saying they both may sit empty for years. Okay, this is what we're facing right now. And we saw this in real time, what the impact could be here with Oracle. Okay, so there are rumors that emerged last week that Oracle may be delayed on some of their AI data centers. Fell 7%. Guys, this is a $500 billion stock. Yeah. When you're talking about a $35, $40 billion hit in a day based off of this rumor. Okay, so this is a real threat. And I think we're going to have this shortage of GPU compute. And like to start with, even if these things were turning on, there's an argument to be made that centralized entities were going to be basically hoarding all the high-end GPU compute anyway. But now we have this problem coupled with the fact that we can't even turn on the data centers that we're building out. And this is the true issue right here. This is the power generation by country. And you look at what China's doing here. I mean, this chart really tells it all. And the US, we've really just been lagging behind, guys. And this is where we need to play catch up. Right?
So like in the US, just to add to that, I was listening to the All In Summit in September this year. And obviously I don't know if you listen to the All In podcast at all, but David Sachs is the AI czar of America. The US, like obviously he's one of the guys that's hosts that show, whatever.
Mm-hmm.
So anyway, they were all talking. Your man, the Jensen, how do you pronounce his name? Huang, is it?
Jensen Huang, yeah,
from NVIDIA.
Yeah.
You know, they had loads of like very high profile AI players on, and they were all talking about the regulation problem in the US and how it's just preventing companies from starting up the kinds of power generation that's going to be required and quickly, and how that was going to be a major weakness in the AI race, I guess, against China. So you know, this is a problem that I suppose is known. I just hopefully that they'll just hope that they get it up to speed. We haven't a hope in Europe. We have not got a hope with the way that regulation works here. I mean, it's even worse than there.
No way.
So,
like, no way.
Like,
I mean,
honestly,
you're probably going to leverage the U.S.
nuclear
companies, I would imagine.
Yeah, it's going to take nuclear.
For sure. And actually, that's the next thing I wanted to talk about. Is like, what is the answer here for the U.S.? Because this is China's production. I mean, they're hitting it from all angles. Granted, coal is still by far and large their number one producer at 58%. They're really the only country in the world that's still building coal plants. Okay.
Mm-hmm.
I think 95% of new coal plants coming online this year are built by China. But they also are hitting it on solar. I mean, they're crushing us on solar. You've got nuclear. You've got, natural gas. So that's something that we're seeing in the U.S. right now. Okay, so we are making some moves. In fact, even the likes of like Amazon, you have the Googles, they're actually building many nuclear plants on site. So they're not even relying on the public utilities anymore. They're taking it into their own hands. But it takes years. A lot of these aren't going to come online until 2030. Solar is another option that can be brought online pretty quickly. And then there is some legislation that just got passed through the House that's going to make it easier for natural gas pipelines to be built. But it's a big issue. It's a big problem, and one that our entire economy hinges on. And I think we will see some catch up. But the other thing that's not being talked about is the water issue. And this is something that we're going to start seeing a lot more people talk about too. So in Texas in particular, you see a lot of these data centers built up because their power costs are pretty low. And it's also, you don't have as much red tape, right? You can build a lot easier. But one of the industry's biggest challenges is how to keep data centers cool without draining finite water supplies. So it says here, Texas is building dozens of massive data centers, but experts say they're expected to guzzle millions of gallons of water a year in a state facing an increasingly urgent water crisis. Goes on to talk about, existing data centers they expect to consume 25 billion gallons of water, or 0.4% of the total state's water. That's in 2025. But just next year, that ramps up to 2.7% of all water used in Texas. By 2030. So it says that's the equivalent water consumption of 1.3 million average U.S. households. And if massive data centers are located in small communities, they may not be able to handle big jumps in water demand. So you see it from both angles, right? You see the electric side of it, you see the water side of it. So these data centers will likely be sitting idle, not even be able to turn on. And even if they were, there's already an argument to be made that all of that high-end compute was going to be hoarded by these centralized entities and really leaving like startups, researchers, any mid-sized or small-sized businesses kind of on the sidelines. And I think that's where a lot of these projects meet that demand. And I think the other side of this token, though, and a lot of people will bring this up, is, well, decentralized compute projects, people argue, can't really train models. So that's the other side of this whole equation, is the type of workloads that you need to power. So we've seen mostly training to this point. And I will say, like, training requires high-end compute. You need the newest NVIDIA GPUs, and in general, you do need data centers, right? Where you have a lot of GPUs in one spot. You need to fine tune those GPUs for certain workloads, for certain types of training. The other end, though, is what we're starting to see is inferencing. So that's actually interacting with the model once it's trained.
Sorry, can I just, sorry for breaking your flow, Bradley, but just before you move on from the water thing, I think that water thing might be a bit of a red herring. Like when I heard people talk, like I've seen it, but it just kind of reminds me of how they were talking about how Bitcoin was going to destroy the world because it didn't have, because it was bad for the environment or whatever. And actually, in reality, it turns out that, to make it as profitable as possible, it's actually more profitable for it to be green and to not use, high rate energy and all that kind of stuff. I'm not saying it's not a problem that we have to solve. I just think, just to take the counterpoint, I just think that we're very, very resourceful at solving problems like that when we have to solve them. I mean, us being humanity, especially if there's a profit to be made. So I don't know. I'm not saying it's not going to be a bumpy ride. I just think there's a bit of I'm not sure that that's as huge a problem as the media are definitely going to love to make it out to be, if you know what I mean.
I think you're right. We tend to solve problems, but the whole point is that between the power, between the water, these are things that can delay an already scarce resource. And water, I mean, that's a whole other topic, but I mean, you have a lot of countries that are going to have major water shortages. You have certain states, California's had their own host of issues there, obviously. A lot of that's the type of farming that's done there, but with avocados especially. But I think, as we see climate change continue to become an issue, water shortages are going to be a real thing. Now, as far as what you're talking about here, will we find a workaround? Probably, but will it happen immediately? I don't know. I mean, I think it'll take some time, and I think it's just another issue on top of the power issue, on top of the scarce GPUs from NVIDIA. You just add all those things up, and you have a problem. And I guess my point is that we can address part of that problem, at least with the projects we're going to talk about today. And I think it does open the door for these projects to be really successful. But I hear what you're saying.
Yeah. I mean, I will admit as well, like I live in Ireland and we don't have water shortages here at all. It falls from the sky far too much. So maybe here would be a great place for people to build AI data centers if water is a problem, because there's a lot of water here.
I don't know what your power costs are.
Power costs are ridiculous. That's the only problem. There's a lot of wind as well, though. So you could get maybe, I don't know if you can get wind powered data centers. I don't know if that's practical, but yeah. Anyways, yeah, it is an interesting thing. And I think there is aspects to it, like Peter Ward here is saying about, like, does it, add to temperature, water temperature increases, that kind of thing. So yeah, it's more complicated than it probably looks like just at a surface layer.
For sure. And for these smaller communities, especially, I mean, they're already seeing on the power side, we're seeing electric rates go up drastically, and the AI data centers are driving a part of that too. We've seen costs go up anyway when it comes to electric costs, but certainly, the AI data centers are driving up costs for people, and it's something that is going to become a growing concern. For all this money that's been invested into all this infrastructure, a lot of it's planned infrastructure. So we haven't seen all these problems really come up yet, and we know it's coming though. So I believe in 2026 and looking forward, these are a couple of topics between the power, between the water, that are going to be in the news. You're right, though. The news tends to make things a little bit more dramatic than they need to be. Right?
Sure.
To get clicks, but I wouldn't say it's a moot point. I think it is a problem nonetheless. But I do want to talk about the actual use cases, right? And that's driving this compute demand. So the training aspect, like I said, does require high-end compute. In a lot of cases, some of these decentralized compute projects really can't meet the training needs. There's a couple that we'll talk about. The vast majority, though, are going to be really useful for inference and interacting with the models. You don't need to have the same level of compute for inferencing and running the models as you do for training the models. And I thought this was an interesting report that I found. And it talks about how by 2030, 75% of AI compute demand is going to be for inferencing. So the green here is AI training. You see to this point, the vast majority of demand on compute has been training. But then you see this transition really starting next year where inferencing starts becoming a much larger portion of the AI compute demand. And that is where I think these projects can really fill that need, because a lot of them are, in essence, acting as the Uber or Lyft for compute resources, where if you have GPUs that are sitting idle, say you're a gamer, you can rent out those compute resources when you don't need them. And you can be connected with people that need to rent out those resources. So these projects act kind of that intermediary. Their platform connects you with the people that need your compute resources. Or, if you're a researcher or a student or a startup that needs to access these, compute resources, you can go to their platform and find other people that have idle compute resources. And it doesn't just have to be gamers or individuals. You can be a business. Maybe you have a data center that you're using only 30% of the capacity. Well, now as a business, you have an additional revenue stream. You can rent out your additional compute capacity. And we have so much compute sitting idle. That's the big thing, is we can tap into these resources that are already there, that are already plugged in, as opposed to having to rely on new supply coming online from these AI data centers. And I'll say it's not just us that are looking at this. This is Treasury Secretary Scott Bessent. Basically, when it comes to the finance world, this is Trump's right-hand man. From his official account, talking about how under the President of the United States, we're exploring new possibilities in decentralized computing and digital payments to unlock the potential of blockchain technology. So they're literally calling on these projects that we're about to talk about right now, because they see the writing on the wall. They know this demand is coming, and they know that these projects can be really instrumental in helping us in that AI race against China. So that's kind of the whole
super interesting
introduction. Yeah, it's wild, right? So that's kind of to set the stage for what we're going to talk about. I don't know if you want to add anything from there before we bust into the different projects, but I think it is fascinating, and I think it's important to kind of lay that framework before we get into the projects themselves.
Do you see a world where, this is a bit of a off the cuff question, but do you see a world where like OpenAI tries to buy like the tech stack off a DePIN, or just like basically swallows a DePIN through some M&A? I don't even know if it's possible to M&A a completely decentralized project. So I suppose it would depend on how decentralized they were, but there's always a labs contingent or some company attached that built the thing. So do you see a world where they just go, yeah, you're right, we can't do this, we can't do all of the inference, and why not use this amazing decentralized technology? Boom. Yeah. There's like, I don't know, $50 million or whatever for.
I think so, actually. I've kind of gone back and forth on this, because there's a lot of people that want to think that decentralized networks are just going to take over and put these centralized entities out of business. I don't think that's going to happen. I think what we're going to see first is a transition. I think you'll see some of these centralized entities might start to partner with some of these DePIN projects to bring on additional capacity. And then over time, I think we will see some potential mergers, acquisitions. And then that opens up a whole host of questions, right? How does that purchase flow to token holders, right? But I think it'll become easier as all of these entities start to have their stocks tokenized. But there's a lot of news coming out about that right now, with Ondo partnering with Solana to tokenize stocks. And the stock market is going to be open 23 hours a day here pretty soon. Then you talk about the stablecoin legislation. I think a lot of the movement of money through normal businesses will be on chain anyway. So I think all of this stuff is going to kind of come together, but it's going to take time. But to answer your question, yeah, I do think we'll see it. And I think right now it seems crazy, but I think at a certain point it'll seem pretty normal, actually.
Yeah, I mean, there's definitely problems to solve because the two models aren't really super compatible, but I guess they could. I mean, as I said earlier, most problems are solvable if you're creative enough about it. All right, should we jump into the?
Let's do it.
All right,
let's jump on in.
So we're going to talk about Asana first, right?
Yeah. Let's kick it off with Asana. So Nosana is a decentralized GPU project built on Solana. A lot of the projects we talk about today are built on Solana. It is a project where you can, if you have excess idle compute resources, you can go on their platform, you can add that onto their platform, and they'll connect you with people that need the compute resources. So if you look at their dashboard here, you'll see they have currently 912 running jobs. They completed nearly 3 million compute jobs already. If you look at the amount of GPUs on there, you see that right now 488 out of 1443 are available. You can see the list of all the different NVIDIA GPUs that are available to rent from. I actually couldn't find on here their revenue metrics, so I'm not really sure what their actual revenue is. I think they probably come out, with reports periodically, but I couldn't find it at least on their dashboard. But you do see they're getting usage. The other thing I'll bring up is they have this grant program that they launched recently. So it says 5 to 50 grand in non-dilutive support for the next wave of builders and dreamers. And the first group to get selected here is this Inferia. And they're actually at an AI agent deployment platform. So kind of cool stuff there. They do talk about it here, but talk about AI models. You can deploy AI models in under 60 seconds using Nosana's decentralized GPU network. So really, I think this is going to be really important for these grant programs, is to get usage on the network, kind of prove out that it works. And then I think as we see the compute resources become more and more scarce, you're going to see a lot of projects turn to these different platforms. But right now it's kind of proving it out. And we're seeing it. Almost 3 million compute jobs completed. It's pretty wild. They also announced this partnership. This is bringing AI agents to life. So this is another project here. I don't know how you say that. Theoric, I guess how you would say that. But autonomous on-chain yield, advancing the agentic economy. So they're going to be, building launch pads for AI agents on Nosana. So pretty cool stuff there. So real world usage, obviously. Token price is way down. This is going to be a theme of a lot of these projects we talk about. Yeah. This was down at about $2 million market cap in the bear market back in 2023. So it's above that. I actually put a video out on this when it was right about here, like 1.7 cents. Look what it did in the months to follow. It got up to over almost $8 actually.
Yeah, so 7 something. It's dropped. It's literally 1/10 of the price it was when I started. Almost a year ago, basically about a year ago, it's dropped from $2 something, 60 something like that to 22 cents. So, But look, this is a common theme with all of the charts of all of the projects that we're going to talk about today, and I actually think Nosana is a great project. Not Hevelo integrating with Nosana, notwithstanding, on its own, I think it's a great project. I've spoken to their founder, Jesse, on this show, on the DePIN Coffee Hour show, and he's a smart guy. I think, if you invest in these projects because of tech and because of the people behind them, which is usually the way that the angle that I usually try and take when I'm buying tokens, is to believe that the people behind them are actually, legit people. Yeah.
The teams are super important.
This is as good as, for me, this is, well, look, on the show today, we're talking about the 6 projects we believe are the leaders in this space, right? So to get on the show, just for us to be talking about them, they had to outperform at some level, in our opinion, all the other options. So, look,
I just don't think the token
price. I just don't think the token price reflects their capabilities or is in any way reflective of how good the company is. That's all I'm trying to say.
Yeah, and look, it's a nascent industry, and crypto in general is still very small compared to the broader financial landscape, right? So when you're in an industry this nascent, there's going to be market inefficiency. So I would argue here it's probably overvalued. Okay, like that's one of the things about crypto being super early to this stuff, and these are really startups. Is markets get overheated. All markets get overheated, but especially when you have newer industries that haven't fully matured yet. But that's not a bad thing, because on the other end of the spectrum, they get undervalued, right? And I think that's where we're at right now, is that there's so much extreme fear in the market. We went from one side of the token all the way to the other side. And I think, right now is the time to be greedy. People were getting, it's just like basic market psychology. People get greedy back here at all-time highs. Right now, in my opinion, this is a great time to be covering these projects, because I think when market conditions do improve, I know everyone wants to say crypto's dead. A year ago, everyone said we'd never have another bear market. So it's just funny how that works. But yeah, I agree with you. I think all the projects we talk about today, I think, are really undervalued. And that's all just because of market inefficiencies. It's still a new industry, but you can use that to your advantage. Havelo, you did bring up, and I do want to bring up Havelo because they are partnered with Asana, and this is really they do a really great job of making it easy to participate in different projects if you have compute resources. This is their website here. Neil knows all about Havelo, but you you connect your computer, your device, and it'll actually connect you with different projects depending on what type of compute you have. Asana is one of them here, where you can actually earn from your compute resources very easily, right? With a few clicks of a mouse.
You need a Windows machine, and you need to have a decent enough graphics card, because Asana runs on GPUs. So that's kind of true of all of the projects that we're talking about today. But if you've got a Windows machine, the other thing with Asana is you need to leave your machine on all the time, because they can't have resources going down mid-job, basically. But it's a job-based network, so they send out jobs. You wait in a queue, essentially, and they send out jobs, and they send out the jobs based on your previous performance and your reputation in the network. So, if your node has been up and it's been online 24/7, then you will eventually have a very good reputation, because it'll start sending you jobs and you'll do them well, and then it'll send you more and more jobs and higher paying jobs, and et cetera, et cetera. So it's one of those ones where, and this is one of the challenges, I suppose, for Havelo, but also the kind of the beauty of DePIN is that there's, all these different networks have different criteria that they use to try and ensure some sort of a level of high quality about their offering. So they all need different things, but most of them need you to be online as much as possible. So it's not great for laptops and things like that, because the human behavior around laptops is you close them and you bring it somewhere else. So you're going to have spiky uptime. But anyways, just a little insight there. And actually, it's funny that you're on the Havelo website, because we're about to launch, just in 2026, we'll be launching Havelo 3, which is the next evolution of Havelo. A much bigger product than just mine DePINs, whichever one's the best for your computer for free. So I'll talk more about that, but I just wanted to give a little shout out to that, because one of our ambassadors was saying that he was hoping I would talk about something that was coming today on the show. So shout out to Sve. Anyway,
and also Havelo is under 100,000 market cap.
Yeah, our token has absolutely been tanking.
Freaking insane.
So to be fair, we have new tokenomics.
It's like all small caps this year.
Yeah, we have. If you look at any DePIN chart, it's going to kind of look a little bit like that. But I would say that the industry as a whole, like a lot of the best projects in the space, have had to really go back to basics and go, okay, knowing what we know now as the market has evolved. Start of 2025, everybody was talking about the flywheel, the value flywheel. Fiat comes in, DePIN tokens go out, kind of thing. And I think most. This is just me with my tokenomics nerd hat on, right? Because I spent a significant amount of time actually looking at how tokens work. Like how is a project addressing buy pressure specifically. Like, what are they doing to actually drive demand? Like, is the token baked into what they're actually doing? Like, do people need to get the token in order for the thing to work? You know, and then what's the sell pressure like? Because your buy pressure has to exceed your sell pressure. Anyways, without wanting to go down too deep down that rabbit hole, I think a lot of projects in the space suffered this year from not having thought about that enough, and not having gone, okay, we thought we'd balanced buy and sell pressure. Obviously, we didn't. You know, maybe we need like 2x buy pressure to sell pressure in terms of when the emissions are happening, etc. So, anyways, it's just it's actually a problem for every crypto project. But I think in DePIN, the opportunity here is that with other DePIN projects, you know, with other crypto projects, it's always been a case where you need retail to come in, you need fiat to flow in, because people are like, I really think Solana is going to be the next big thing. I really think insert crypto here is going to be the next big thing. Third coin, whatever. So you need that fiat, the hard-earned cash to flow into the ecosystem for the value to go up, for the market caps to go up, etc. So with DePIN, we have the opportunity to have it baked in, to have it literally built into the system. So that's why I'm excited to talk about some of the enterprise projects that we have on the sheet today.
Yeah,
we'll get to.
Well, I mean, my point here is like I'm looking at this as an opportunity. 100 grand. If you guys go to a $10 million market cap, that's 100x. Like these are the things I look for when the market's down, is undervalued projects. I mean, that's why I found Asana at 2 million market cap. That thing did, over the next 6 months, did a 350x. Like these are the times you have to be looking for these gems, man. And this is one where it's like, okay, under 100 grand is criminal. And so like if the GPU side of things picks up, and you guys see the usage come through that, like these are the ones that can do crazy multiples. And you don't get crazy multiples buying billion-dollar market caps at market tops. You find these undervalued hidden gems right now. Next one on the list is Akash Network. So Akash has been around for some time. Originally built on Cosmos. Some changes coming up there, but they're another one that is sourcing compute in a decentralized way. You can see on their network their total amount. Sorry, go ahead.
No, go ahead.
I was going to say total amount spent is 4.7 million. Daily spend right now is about $5,500 a day is what they're generating. If you actually look at the graph here, so obviously all time, you can see that the climb that we're seeing here. The daily, has been up and down, but it is still climbing back up here. But overall, consistent uptrend, really, on the amount that's being spent here and being generated. And you can see all their network capacity, whether it's CPUs, whether it's GPUs. So the whole trend here, guys, is that we're seeing more compute being added to the networks. We're seeing more usage of the networks and more revenue being driven by these different networks. I don't know if you want to add something before I go into the changes they're making to their tokenomics and to their chain.
Yeah, I just want to say about Akash. I met a couple of their guys way back at a Cosmos conference years ago in Colombia. I've also had Greg, their founder and CEO, on. Very, very smart dude, like razor sharp. From a team point of view, these guys have a huge vote of confidence from me, because I think they've been around for a while. They really know their stuff. They've got brains to burn at the top. So like in terms of decision making and, reading the tea leaves, looking into the future and trying to make good decisions that reflect, the lay of the land, I think, I think they've done all the right things, and I think they're continuing to do smart things. So this for me would be a very good play, but again, not financial advice or anything like that. I'm not suggesting anybody should go out and buy a bag. I just think, like, from my point, I'm quite bullish on Akash.
Okay. Yeah, I totally agree. I'm actually looking to get Greg on in January to do an interview on my channel. And there's a really cool article here that they posted recently talking about how they started Akash. But I think the cool part here was talking about this guy. There's a student that couldn't get GPU resources. Where is it here? Oh, it's a Cornell student. Couldn't get a single GPU from Amazon. Got in touch with Akash, trained his model, and sold his company to NVIDIA. So just an example of the type of usage and real world utility there that comes with these types of networks. A couple of big things that are happening. So they are voting for a new chain.
Sorry, just before you jump on to the next things that are happening, just so people understand, like the idea of Akash is that it's the super cloud. So basically decentralized AWS. And I think Greg said it was an 80% discount. So like 80% discount on what you're paying AWS for a similar service. They haven't got all of the services that you can get on AWS yet, but they're working on it, and it will be feature parity. Like it will have feature parity at some point in the not too distant future. I think these guys build quickly. So I think I just think it's a very hard angle to deny. It's a very hard pitch or whatever to deny is AWS at 80% discount, and it's decentralized. So it's not going to suit everybody, but there are certain things like especially identity and anything like that where you really don't want it centralized if we can help it. So I could see a whole range of applications and downstream use cases for what Akash are doing.
Yeah. Look, there is definitely a financial benefit. Yeah, so that's part of this. Like they can come in at a lower price, generally speaking. The decentralized aspect of it too, like if you're inferencing, you can access compute closer in proximity to you, so you don't have the latency you might have by going through an AWS, which maybe their AI data center is in Texas, right? Maybe with these projects, you can access compute that is in the same city as you, right? So there are certainly some benefits to these projects, but I'd say the big one is getting access at all. For a lot of those centralized entities, if you're getting on board with them, it can be a multi-week process. You have to sign long-term contracts in many cases, right? It's not cheap. It's very expensive. Here, you can go to these platforms at a fraction of the cost, spin up compute in next to no time at all. And it's just very, very flexible in the contract terms too, right? You don't have to enter in these long-term contracts. So I think for a lot of entities, that's going to serve their needs. But yeah, as I was saying, the Akash migration is going to be taking place. So they were on Cosmos. As you all know, a year in the crypto space is like 5 years in traditional markets. So things change quickly. And I think we saw with Cosmos after the 1010 situation, not saying it's their fault or not, it was actually Binance had their pricing issues, their fault. But I think we're seeing that more buildings taking place in other chains. So they are looking at moving to a new chain. They said the only ones that aren't under consideration are Tron, BNB, and Ton. So I think, I'm pushing for Solana or Base. That's where I think all the building is really taking place at this point. So I'm hoping they go to one of those two. Avalanche is another notable one, I guess you could bring up too, but I'm hoping they move to Solana or Base. I would imagine they're gearing towards Solana, but we'll see how that turns out.
I was introduced to a project that's doing something to sort of blur the line between Solana and Base. Basically, if you have a token on either of the chains, it'll be composable with the other chain. Not really composable, but just like it's like a bridge, but a new kind of bridge that doesn't require liquidity or something like that. I must look up what it's called. But anyway, very interesting, because what that signals to me is that the distance between Solana and Base, if you've got digital assets, is getting smaller.
Yeah,
really, it's almost non-existent. And
yep,
if you can keep your assets on Solana but use them on Base or vice versa, then obviously that's a big win for both of those chains, I think, because the liquidity will flow easier.
Yeah, that bridge that they launched, I think you're right, and really that then means you can access liquidity across both, which is great too. I mean, that's a huge benefit. The other thing is the tokenomics change. So we kind of led off with this. Some of these projects now are having to rethink their tokenomics to drive more utility to the token. So this burn mint equilibrium, this is essentially going to allow revenue to support the token price. It's also going to burn tokens out of supply. And I think this is a key thing that we're seeing with projects, because as you mentioned earlier, one of the big problems with a lot of DePIN projects that they were just emitting tokens. There's no buy pressure to offset that, right? Unless you had speculative investors, which we haven't had this year, obviously. So all you had was just this ongoing sell pressure. When you have a tokenomics model where the revenue you generate is then used to buy tokens in the open market, now you bring in a new buyer, and not just any buyer, but this is new liquidity from customers, in many cases Web 2 customers, that you're bringing into this ecosystem. So it's a new flow of capital, and it's being used to buy the tokens in the open market, creating support for the token. So the fundamentals are now being tied to the token, which is, I think, absolutely key. We've seen Helium announce that. We saw HiveMapper announce that. GeoNet and Rover are two others that do this. And I think we're going to see more and more projects do it. So I think it's great that Akash is making this change as well. And I think that when you're paying attention to these things, most people don't know this stuff is happening. When you have fundamental changes like this, I believe those projects, when the market rebounds, are going to rebound much better than the other ones that haven't been making these changes while the market's down. So just another example of things. If you're dialed in right now and paying attention while everyone's bored and exited the market, I think you're putting yourself in a good position.
Yeah, 100%. 100%. This is the time when you buy and it turns into actual wealth, not when things are ripping and everybody's talking about, oh, should I buy Bitcoin? Should I buy XRP or whatever other stupid questions people ask when when the news starts to cover it, mainstream media.
100%, man. So this thing was all the way up to 721 in the last market cycle. And of course, that was a very speculatively driven market cycle. We had retail in and things got a little crazy, sitting at 40 cents. I mean, this is right around where they were in their bear market low. I mean, I covered them back right in fall of 2023. So we're about the same price we were there. Granted, the fundamentals again have improved. Tokenomics model is changing, and they're moving to a new chain. Okay, so I think all in all, this project is poised, like many of these, to really bounce back.
The burn mint equilibrium thing that they brought in, that model, I believe that went live last month. So I was curious to see would it, like how quickly it would kick in terms of balancing the buy and sell pressure, and like economics 101, supply and demand, right? So supply, you need to restrict supply, you need to increase demand, the price goes up, is the consequence, the mathematical consequence. So theoretically. So I was interested to see if that economic theory played out in reality and how effective the model was, but I think it's too soon still. So I think we'll see that more fully next year. And I think what we're also going to see is if they've got it right, if they have the math right, then what we'll see over time is, as the network grows and demand for the network grows and more fiat enters their ecosystem, the BME, burn mint equilibrium model that they put into place should be a force multiplier for that. So they should see essentially the token looking after itself a bit better and not being as much of a victim to whatever macro factors are happening. That's my theory anyway.
Well, yeah, of course, it all comes down to if the revenue generated is enough to burn enough tokens to offset emissions, right? And we're seeing projects like Helium is net deflationary, where their burn is more than emissions. GeoNet's closing in on that. So it can't hurt. It can't hurt bringing in a new buyer to support your token. you just have to get to a point where you're driving enough revenue. So the more revenue you drive, the better the token price should do in theory. This is a newer change for some of these projects to go fully to open market buys. So I think we still have to see how it plays out. But to me, that is what is going to drive the great decoupling, if you will. What's the next project? Do you want to go to IONET or Render? Oh, I can't hear you.
I was muted. My bad. Technology. Yeah, let's. I don't mind. We can jump to Render, maybe.
Okay, let's go to Render. Render is probably the most well-known GPU project out there. They've been around for a while. Their team is like crazy. So you have Jules Urbach, who's known as the godfather of rendering. Ariel Emanuel, who's the CEO of Endeavor. I believe they own like the WWE and UFC. J.J. Abrams, obviously he's been behind some of the Star Wars movies. You've got Brandon Ike, who's the founder and CEO of Brave Browser. You got Beeple on there. The list goes on. So completely stacked team. If you look at their dashboard, you can see they also are built on Solana, by the way. They weren't originally. They were on Ethereum before they moved over to Solana. That's been some time now. But you look at the burns. So they introduced also a more aggressive burn schedule to revenue. You see the accumulated burns and the trajectory we're seeing. The usage on the network is fantastic, obviously. And there was an article that came out a little bit over a year and a half ago, that Render Network is basically baked into iPads. So some of the newer iPads through this Octane X, which is another company that Jules Urbach has worked with. Actually, I think he might be a founder of that as well. But essentially, for the iPad, it's using Render to render images in this software that's baked into these iPads. So pretty freaking awesome stuff there. It's also worth noting, in last New Year's Eve, I was at the Las Vegas Sphere for a show there, and there's a number of shows that have been rendered using the Render Network that are not powered by Render at the actual Sphere itself, but created and rendered using the Render Network. So pretty freaking awesome stuff there, man. That they're obviously they're a little bit of a larger cap at $720 million, but
they're a big gorilla. $730 million, and it's not even like the token, and that's at the token price is nowhere near all-time high. I have had Render for a while. I bought it for the first time I bought Render was like, I think 2021. So I've pretty much ridden this particular token train up from sub $1 all the way up to, I don't know, I think it was like $10 or $11, and then all the way back down to like $1.40, which is what it's at right now, I think. But look, this is like, if you want to have a dip a toe in and into a relatively safe, let's call it, a relatively safe token in the space. I mean, you can't really go too far wrong with Render, and it's absolutely on sale at the moment, in my view.
Yeah, like it's probably the most well-known, again, GPU project out there. After this year, I don't know if I feel comfortable saying anything safe anymore, but no, I hear you, man. I think
safe is probably the wrong word.
It's very down, though. I mean, what was it, over $13 at one point? So like it is down quite a bit. Still a higher cap, but also I think they have institutional eyes on them. They have a Coinbase listing. They have the team behind them that draws eyes. So I do believe we could definitely see that bounce back as well. I think all these will, frankly, the ones we're covering, because the market's just more depressed than I've seen in my time in crypto. And it's been 5 or 6 years. So this has been a pretty crazy year. I don't know if there's anything else you want to cover on Render before we move on to IONET.
Not really. I mean, I think it's a super interesting project, and I think it's worth investigating more if you're interested in that space. It's obviously, yeah, I think you said enough. IO.net.
IONet. Okay, so IONet also built on Solana. So a trend here today.
So what I'm hearing you say is everybody should own Solana. Go buy a bag. I mean, honestly, you should. In my opinion, it's just like they're so on it.
Yeah, there's gonna be a lot of they announced yesterday Ondo is gonna be tokenizing stocks with Solana, and I do believe like most DePIN projects right now, not all, but most are being built on Solana. Solana has been very helpful in pushing DePIN forward. I mean, a lot of their co-founders have been speaking about DePIN recently. And if you watch Solana Breakpoint, I mean, there's been a heavy emphasis on DePIN. So I think I do believe that DePIN is going to forge ahead. It's still just kind of that secret that people don't know about, but it's just a matter of time. IONet's an interesting one. Oh, sorry, go ahead.
Solana, I was just going to say on Solana, they're very, very switched on. Like they've always, and this is a project that essentially was originally launched by SBF when he was still a rock star, and they survived his downfall and all the collateral damage that went with that. And I think it's largely due to the fact that the founders are kind of Silicon Valley guys, build fast, iterate. So I think they just have a commercial mindset, and they've done a lot of really smart things. I think Solana is a great layer one. I think, look, at the start of 2025, we were also as a Havelo, as a Solana project, we're filling out forms for their DePIN summer that they were going to be doing. So they've been aware of DePIN and have been, trying to get that sector closer to themselves through all the usual things like incentives and grants and even just publicity and that kind of thing. So, they're very switched on. Very, very. I would never underestimate the team in Solana.
Yeah, and they just launched mainnet on their Fire Dancer upgrade, so that should help with further decentralization and make the network even more stable. Which there's still this like thought that Solana's down all the time. It's been, I think, like 18 months. They've been getting hit with a huge DDoS attack too over the last week. We haven't noticed any issues at all, and the Fire Dancer upgrade is, in theory, can get them to 1 million transactions per second, is what they're saying. So pretty crazy stuff, man. It'd be awesome. They have some things they need to work out with some of their validators and making sure that the math works out for them. But I think they'll get it figured out. And really the amount of building taking place there is crazy. And IONet is one that obviously is built on Solana. They had a little bit of an interesting start. Oh, nice, Crypto Hunter. They had an interesting start where their CEO at their token launch had a checkered history that got brought up. He ended up stepping down, and they kind of worked through that. I think it did depress their token price a little bit at the beginning, but they're getting usage, man. Like you go to their Explorer, you can see how many cluster ready and fully collateralized GPUs and CPUs are available there. How much are getting usage? So how many are hired right now? Just under 2,000 are currently being utilized. So that's fantastic. When you look at their revenue metrics, they're earning, generating about $6,300 per day right now. Total network earnings so far have been over $21 million. So you see the trajectory. I mean, that's what you want to see, right? So all fantastic stuff. Usage, they have capacity, they have the revenue coming through the door. The other thing I will say is that they just announced, and this is the first I've seen do this, but they are actually looking at addressing the issue we talked about, where it's really hard to build a business with the amount of price fluctuations we see in crypto and DePIN, especially. if you have a platform like this where you have GPUs and you have people renting out your GPUs, you need to have stable supply. And I think what we're seeing with some of these projects is when the token prices plummet, people don't see it as worthwhile to have their GPUs connected and they disconnect from the platform.
Right.
It's impossible to build a sustainable business that way. So what they're looking to do is basically build in deflation. So a theme we've been talking about, right? Where at least 50% of the revenue is burned. So removing tokens from the supply. So they're looking at removing over 150 million tokens from the supply. That's big. They're also, the predictability part is huge. So they are looking to integrate USD targeted supplier rewards. So you have more consistent rewards. So as a participant, you can have better insight as to what you're going to be earning, and you're going to be insulated from market fluctuations. And it's going to be tied really to the revenue that's being generated by the project. Now I looked at the full details on this. They did go into the weeds and say, hey, it is important early on to be able to bootstrap your network. Like you have to do the token thing. You have to deal with token fluctuations early on to build up that supply. But once you have revenue, it makes sense to transition to this type of model that can support more consistent payouts. And I think we're going to see more and more projects adopt this strategy. It takes time to get there, but it's cool to see that they're there. And I think it's exciting. And I think that it will bode well for them and make it a lot easier to build a sustainable business.
Yeah, my chief concern with IONET at the moment is that their circulating supply is 250 million and total supply is 800 million. So I'm not sure if they're like where they're going to burn the 180 from, if there's a timeline to that, or if it's just out of the current circulating supply. I doubt it's out of the current circulating supply, but that would be a massive percentage of what's circulating. So it's probably unlikely to happen like in the immediately short term. But yeah, I always get nervous, and this is just a personal thing. I just get nervous if there's a very small circulating supply relative to the total supply, because it means obviously there's a lot of inflation to happen.
Yeah, I think it's important in those scenarios to you really have to look at the tokenomics. I mean, you have to look at the unlock schedule, and you have to look at what your time frame is from an investment standpoint. If the tokens aren't going to be in circulation, or it's over a 20-year period, I mean, that doesn't matter as much. Now, there's different schools of thought behind this. I've talked to certain people that they're like, I always look at fully diluted valuations. I don't care what the circulating supply is. And I think some investors look at it that way. To me, I'm more so, I'm willing to do the research and dive in deep and see what the unlock schedule is. Look at my time frame on that investment and run some pricing scenarios depending on unlocks, what that circulating supply will look like a year, 2 years out.
Right.
Do that analysis because I think it's important. So, context matters there, but I do hear you though. If you only see 10% of the supply in circulation, that is something I think you have to look into further to understand 100%. The context.
Yeah, 100%. But like 5 years is, like you said before, 5 years in crypto time is like a lifetime in the real world. So the technology is changing so fast that, again, and I did preface by saying that it is my personal perspective on it is that like I only ever take kind of maybe a 5-year view. So where will we be in 5 years? It would be very unusual if the emission schedule, like if people have vesting cliffs and things like that go for 5 years. So yeah, but again, you're absolutely right. Do your homework, do your own research.
Do your homework. That's the main takeaway there.
100%.
Let's move into a couple of the behemoths. Okay, so we talked a lot of the projects we covered so far are, I'd say, mostly inference at this point focused, right? And we talked about the training aspect, and in many cases you need the data centers. I mean, you need the high-end compute, but you can't really, it's hard to source compute from all over the place and do sophisticated training. You normally need to have, clusters in one place, but also in many cases fine tune the data centers for that specific type of workload or that specific type of training that you're doing. And I think, Aether is an example of one that I think is doing a pretty good job. They are a larger compute project for sure. If you look at the amount of revenue, compute hours, it's pretty insane. You look at the GPUs. I mean, the GPU containers at 440,000. You can see the GPU nodes available. I mean, they have a massive network. Their ARR right now is just under 97 million. So
that's bananas when you consider that their market cap is 153 million.
It's pretty wild, man. I mean, it is pretty wild.
That's bananas.
The other thing that I think is really worth calling out with them, though, and this is something that probably has flown under the radar for a lot of people, but let's see here. I think I have some highlights. Yeah, here you go. So this predictive oncology, this is a couple months ago, announced the launch of its Aether digital asset treasury following a $344 million private investment into their token, ATH. So, of course, the digital asset treasuries are generally NASDAQ traded companies that add crypto assets to their balance sheet. So this is the first we've seen of a DePIN project to my knowledge. I believe Helium announced they're working on it and a DAT as they call it. But I believe it's the first we've seen a DePIN project actually added to the balance sheet of a publicly traded company. So
just going to, when was that?
A couple months ago. I think I want to say like September, maybe.
Right.
And it says today the network spans over 435,000 GPU containers across 200 locations in 93 countries. So pretty cool stuff there. They have H100s, H200s, B200s, B300s. So those are the types of GPUs you need for like those training workloads, those more compute intense workloads, as opposed to say inference. So,
right.
So yeah, so very cool stuff. I mean, pretty groundbreaking to see them added to a balance sheet. I think that there's some people that question their revenue metrics because I don't think everything's necessarily on chain. But I think if you're seeing them added to a balance sheet of a publicly traded company, that does certainly give some validity to their claims. And right now, sitting at $152 million market cap. So, I mean, look at that. Like you said, if they're just under 100 million in revenue, that's not bad, man. Especially in comparison to other DePIN projects. And I would still say like the price to earnings ratio. I don't know that DePIN projects really, you can look at it that way. Like that's a metric you'd use for traditionally publicly traded companies, but DePIN projects have that burn to mint equilibrium. They have basically stock buybacks taking place from revenue on an ongoing basis. I think we still need to hash out what type of valuation model makes sense for DePIN projects, but another one that, again, 85% down from their all-time highs, and obviously have a tremendous amount of usage taking place. So,
I think
it's one to keep on your radar.
I just think if like, obviously it depends. Again, it comes down to the tokenomics, right? But if the tokenomics are baked in, like what I would call baked in, so in other words, if the tokenomic design is such that it ties the token directly to the performance of the company, so the more money they make, the better it is for the token. And there's a number of different mechanics that you can use to do that. But in any case, like the most basic would be a buyback and burn. So you take a percentage of the revenue of the company and use it to buy tokens from the open market and burn them. And it's a percentage, so it's a continually fixed piece of math, essentially. If you're doing stuff like that, I think the P2E ratio begins to make a little bit more sense. But if they're completely disconnected, then I agree with you completely. It's like it would need to be figured out somehow, because the two definitely wouldn't have a direct mathematical relationship, at least. But that's fascinating. And predictive oncology, I think that's a really super interesting. It's a super interesting area of tech at the moment. Is like, how do we apply AI and what's possible with the AI we have to predictively cure for diseases like cancer. What I'm super curious, because I didn't know that. So what I'm super curious to know now is why would predictive oncology want that big a chunky piece of ATH? what's in it for them? Like, is it a belief that it's going to go somewhere? Is it because they need to secure a certain amount of the token for stability because they're using Aether?
Well, they must be bullish on the price of Aether. And I imagine maybe they're using the compute too. I'm not sure. I'm sure they did their due diligence.
That's a big investment, so I'm sure they did. And they probably know something we don't, perhaps.
Potentially. I do try to follow the smart money. I think retail tends to capitulate and sell in times of extreme fear. If you look at the trend that's been taking place, I mean, smart money and whales are positioning right now. And it's how a move like this, an entity investing that heavily into Aether, I would imagine that they do have probably some details we don't have, if I were to guess. So
there you go, folks. If you want to pick up a bag of Aether, you can go to Coinbase or KuCoin are the biggest ones, but it's on OKX actually as well. Upbit, Bybit, Gate.
By the way, for anyone that wants to understand where you or know where you can buy these things, if you go to CoinGecko or CoinMarketCap and you go to any token like this, just hit markets. It'll tell you all the places they're available.
Which are you on?
You can generally
CoinMarketCap?
Really sort here. Yeah, you can sort by centralized exchange. So you can go by centralized exchanges. You can sort by decentralized exchanges. You can see the trust score. So very easily. You can do it from CoinMarketCap or CoinGecko. On any project, just go to the top, hit markets, and it'll take you to where it's available.
Yep.
All right. The last one on the list is, drumroll, Exhibits. So, guys, this is one that is like super under the radar. They haven't launched their token yet. I feel like I'm like the only person that covers this project. I wouldn't even know about him. I ran into him at a crypto conference like a year and a half ago. And it says here, mothership of AI compute, base layer, everyone builds on. And I will say they're more of a hybrid. Okay. So there's some people that are like, well, it's not fully decentralized. Not in the sense of what we would normally think of with a DePIN project where, anyone can, with a GPU, can participate in the project. They are actually building out like legitimate data centers. And they're tokenizing that compute. So if you look here, you can see in the US, they have data centers all over North America. They have them all across Europe. They have some in Asia. So it's decentralized from that standpoint, where they do have data centers they're building out across the world. But guys, these are very, very sophisticated data centers. They're using the highest end NVIDIA GPUs. They're building out
H100s, H200s.
Yeah, in some cases, thousands of them in some of these data centers. Their team, they have PhDs from Princeton, from Harvard, from Stanford. They have people that have worked for the big Web 2 companies. They know how to build out the data centers. They know how to fine-tune the models. They know how to build out the cooling systems. The biggest thing, though, really is finding not only data centers that have the capacity, but the power to turn on the data centers. So they have all the expertise to do that. And I will say, one of the reasons I like them the most is because these other projects, we've covered all of them. Render Network, Akash, IONET, Aether, Nosana is another one they just added. I don't know if they have it on their list yet on their website, but when those entities get demand for inferencing, like we talked about earlier, I'll leave this here for a second. They can do it through their own compute that they've sourced. But if they have a customer that needs to train and needs really high-end compute, they turn to Exhibits. They leverage that compute. Yeah, so essentially it allows them to serve all different types of customers. But yeah, Exhibits is that base layer for the high-end compute side of things. If you really want to train models and get that, AWS level of compute. And I will say the one differentiator they have, price I think is going to be a little bit better, but the level of support, more flexible contract terms. So I think Exhibit serves a purpose in this space that most of the other ones can't serve on their own, but they kind of roll up to Exhibits. So you see here their different pricing structures and stuff. But pretty fascinating, right?
That is pretty fascinating. My brain is just thinking of the different angles on that. Like I can see the argument against something like this because it's just centralized. It's like another AWS, whatever. So, but I would imagine that they would be able to solve for that. You were saying they're tokenizing the data centers. I definitely gonna have to look more into how that works because just having a different name on like a non-Jeff Bezos, like AWS is still an AWS. But yeah, but there probably is a way to semi-decentralize it at least.
I'd say it's decentralized in the sense that they have data centers all over the world, so if you're looking to access compute closer, you can. It's going to be cheaper, it's going to be tokenized, and they're partnering with all these other decentralized compute projects, right? So I would say that's the biggest differentiators across the board. And you can see their price points there. Right now, as of last year, they had 12 million in ARR. I believe their goal was to hit 50 to 60 million. I think this was last December these numbers came out, so I don't know what their updated figures are, but to me, this is one that I have my eyeballs on for their TGE. They have not yet launched their token, but it is coming. So this is the one I'm probably most interested in at this point, just because you can get exposure to essentially all of the decentralized GPU projects by getting exposure to this one. But the other ones, depending on how undervalued they are, and you got to do that analysis on your own. But, these are the times where you can get multiples by finding projects that are undervalued. I think you're going to see the revenues growing, the fundamentals are growing, the need is going to be there. It's just, you just got to put it all together.
Yeah, 100%. I think what would be super interesting is if a company like this did some sort of a scheme where they launched a token where if you own a token, like for every token you own basically a percentage of, like essentially the money that they raise from selling the token goes to essentially crowdsourcing a server, like crowdsourcing the cost of the metal and putting it into a center somewhere, and then you would have a distributed share of the revenue generated from it as well. That would be a really interesting model, because then you'd have thousands of people owning little pieces of servers that work until they don't. I mean, these chips go out of date pretty quickly, but I think you can still get, a few years of revenue from them before they're not as good for the types of things like it's the H100, H200 today, but in 2 years it'll probably be something else, like I don't know, the H1200 or something. So yeah, it'd be very, very interesting to see what happens in that space to kind of try and make things as decentralized as possible, because it's not just about how close the data centers are, right? It's also about like how censorship resistant is it, how sovereign is it. Those kinds of things become more and more important as AI and AGI and superintelligence, etc., comes about, and where as the economy changes and we're all essentially, I don't know, I don't think anybody really knows what it's going to look like once AI and robots are doing all the jobs. I don't know what the rest of us are going to do, but I would imagine having identity and having privacy are going to become more and more important digitally in an immutable way. So I think so that's all going to be very interesting, and where the data flows and where it's housed is going to be super interesting as well. So fascinating. Exhibits is definitely one to keep an eye on.
I'll throw in one bonus, guys, and then we'll end this. I've got a space coming up I got to hop on. USD.ai. Okay, they haven't launched a token yet either, but they will be launching a token. This is kind of what you're talking about. They're collateralizing GPU resources, so you can stake stablecoins, get an APR on your stake, and you're basically investing in infrastructure. So on one end, they're collateralizing the GPU resources, these data centers, and you can invest in those and get a return on your investment. Plus, again, they will be launching a token. So they open up rounds that you can, invest in every so often. They fill up in about 5 minutes. I believe they've already raised like hundreds of millions of dollars. So this is one I would absolutely get on your radar. They're going to be a monster. And a lot of people in crypto Twitter space probably don't know too much about the likes of Xbits and USD.ai, but I think both are going to be absolute behemoths.
Yeah, super interesting idea. I will definitely look at that. Do Exhibits have any plans? Do you know if they have any plans to launch a token?
Oh yeah, they do. I've had them on for an interview on my channel. They're a CMO. Yeah, it's just a matter of when. I'm not sure when their TGE is. I think it was supposed to be Q4, but it may have gotten pushed. I don't think they've made an official announcement yet. But yeah, they're launching a token for sure. So basically, by owning a token, you have percentage ownership in their AI data centers. I mean, their whole goal is to democratize and tokenize compute, so they can crowdsource investment from all over the world. And again, this is USD.ai. I realized on the website you couldn't see, so this is another one to certainly follow, get on your radar. But collateralizing GPU resources, and they've got some big backers, they've got some big investment, man. And you follow when they open up their investment rounds, those things close quickly. There's a lot of money going into this.
Amazing.
Woof. Well, that's quite a session, man.
Yeah. An hour and a half. I need to drink some more electrolytes. I've been drinking too much coffee.
It is the coffee.
All right.
Well,
it is the coffee hour, so I'm trying to, be authentic. It's going to be the coffee headache hour in about 10 minutes here, unless I get some electrolytes into me. But yeah, look, that's thanks a million for coming on again. Do you have anything you want to finish with?
Yeah, look. We talked about robotics last time. We talked about the GPU aspect empowering the AI in this one. I think it's just so important to understand where things are headed. AI has been largely driving our economic growth. And I think we see these issues that are going to be coming up around the power, around arguably the water and the cooling systems. But there is a need that is going to be addressed. And when you see that transition over to inferencing, especially, I think a lot of these projects can really bounce back. Now is the time to be paying attention, guys. While the market's down, the basic market psychology is always like people want to buy at the top, right? And these are the hardest times to have conviction. But for anyone that's watching right now, give yourself a pat on the back, because most people are gone right now. Like, this is the time to be grinding. Your future self will thank yourself for doing what you're doing now. And the next thing I think we'll probably talk about is going to be the data collection side. So data is needed to train these models. Eventually, they're going to scrape all the data that's out there on the internet. There's a lot of DePIN projects that are creating brand new, fresh data sets. And that is going to be another element of DePIN I think is going to do incredibly well. Yeah,
100%. Agree with that completely. All right, guys. Thank you, Bradley. Thanks again for coming on and sharing your wisdom. Thank you to all of you who are tuned in for another episode. We'll see you again next month. We'll be coming back at you in the new year, probably around the same time, second or third week, I guess, of the month. So yeah, that's it for us today. Just think that the hardware squeeze isn't going to end in 2026. I think all the tokens that we talked about are worth taking a really close look at, because I think things are just getting started. Yeah. So that's it for today. Thanks, guys. Thanks, everyone.
Take care.
See you next time.